Okay, boom, we're live in like a temporary setup. We had studio computer problems. I realized it was 5 years old. So today, Saturday, we're doing a little test run. As you can see, I dragged a microphone stand out of the uh, the garage for this one I haven't used in a bunch of years. We're gonna try something new. So we're just gonna basically do an AMA for today, but we're gonna start by looking at Bitcoin's price and making a little bit of a rant while we wait for people to show up. So you should be able to see on the screen now Bitcoin, and this is one of the fun parts is that now that you see Bitcoin, I should actually be able to scroll around and everything should be going smoothly again. Looks like the studio computer. I didn't realize it's 5 years old already. There's probably time for a new one. So we're using our writing computer today. But nonetheless, this kind of mess of colors is one of the things I wanted to look at. And one of the reasons why I thought we were going to around the $40,000 Bitcoin mark. So right now, what we're looking at, actually, let's go back here. Like this, yeah, okay. Okay, yeah, so this is one of the reasons why I believe we're in a mid-range accumulation. There's a huge gap between where we are today and a lot of our previous buying and selling support down near, like, let's say $12 to even $20,000. So a lot of people are arguing that we could go this low. And in any market, there's reason to believe that. But I think what's important to note is how we got here, right? So back in 2017, when we went from $3,000 to $20,000, the speculation around that was largely from retail, and there wasn't a lot of complex instruments, derivatives, or on or off ramps yet. In 2017, you were still super fucking early to anything that was going on. So we were really early in 2017, let alone our earlier entries. So this previous market cycle run-up has actually been induced by a lot bigger of a player, or their interest, and their sophistication, which usually leads to different market dynamics. So one of the market dynamics I think that's evolving here is a much stronger case for Bitcoin. I was just on Twitter. Let's go over here to Twitter. Follow us on Twitter, by the way. Give us a thumbs up if you like this content. One of the things that we were reading was Kevin O'Leary's update and his kind of thoughts around the crypto space. Now, what's interesting is that when I first showed up here, the crypto space was very fringe. So now that fringe is becoming mainstream, I think we're seeing a cultural adoption that's going to be impossible to stop. And effectively, people are realizing one of the things that I really was excited about for Bitcoin was that when Bitcoin first went from $90 to $1,000 during the Cyprus banking collapse, effectively, I think the estimation of a sovereign nation's stability became a front page kind of news for almost a lot of people in Europe. And this is really the idea where, hey, look, banks are often insolvent. They're running fractional reserve. Countries themselves are also insolvent. The currencies that they're using for their bonds effectively can collapse very quickly. If you see a strengthening dollar, you're often going to see a decrease in the third world nation's ability to be competitive within the ecosystem as well. So there's kind of all these knock-on effects of the larger US dollar inflationary scenario versus these other currencies and their countries like Cyprus. And the ability to freely move your assets around the globe that's not really held by the fiscal reliability of a government, something that's backed by technology, is really something people are still undervaluing. So when we see Bitcoin at this price range today, and now all the mainstream institutional investors are here, we have to ask ourselves, how would we get that low? What's interesting here is that if we start to take a closer look at this trading range, and this is something we haven't done in a while, which is kind of nice to be able to do too, is that we haven't actually looked at the Bitcoin chart for some time now because the computer had been too slow to go in really granular, especially with all these indicators jacked open. So I'm excited to fix the studio computer over the next little while here. But nonetheless, there's a massive amount of confluence right now going on the daily that I'm interested in, the daily and the 6 hour. So on the daily, we are right below the 200 and 314 day moving averages, which we bounced off of here, both the green and blue lines. We're right smack dab on the 50-day moving average, and right now we are at the bottom of our our Bollinger Bands effectively. So the next important part here is actually the point of control, which we've explained a bunch of times. I think it's an important one to indicate as well. The point of control is this red line here. Now notice how it switched. It jumped from around 10,000 to around 30,000. So again, the argument is that we could come down to 10,000 because most of the control buying and selling over the last few years prior was around 11,000. But it's important to remember most of the people who were able to and who were accumulating very large sums of Bitcoin during this time were significant interests who have the capability of sitting on an asset for multiple years without thinking and effectively only accumulating. Michael Saylor's and MicroStrategy has done a fantastic job of this, which is basically just get your hands on the assets that you're interested in at any case possible. So because of this, the likelihood of the floor being set up here, this new point of control, at least within the visible range, again, as you can see, as we go back in time, the point of control drops back down to 10 grand. But the visible range, I think, is a much more important story. We've seen a significant amount of fear in the markets over the last few months, and a real crisis, even if it does dip us somewhere down to the $20,000 range, the speed at which that would be bought up and the targets moved significantly higher. There we go. The speed at which the markets would move up higher. Yeah, I guess this is the thing. Move the studio around. It takes a little minute to figure it out here. Okay, there we go. So now you can see, I think we're on face share before. Classic TO. I guess that's the other thing. 5 years of doing this, and I still haven't figured out how to switch between screens. It's amazing. It's wonderful that I know how to play an instrument at all. Learn how to do things when you're younger, ladies and gentlemen. It's way easier. Okay. So the point of control is this red line in between. There's a massive amount of buying and selling that's taken place between the $30,000 and $40,000 range. I suspect that we're going to test this point of control. I don't use moving averages as an interest. And so even though we've pointed out right now that as we zoom in, we're smacked right between the 200, 314 and the 50-day moving averages effectively, it's relatively unimportant compared with the point of control. The point of control is where, especially now, as we have such large interests here capable of accumulating on a systematic basis, becomes one of the most important parts, because there's a lot of momentum and mean trading that takes place by big funds, hedge funds, institutions that are showing up now. So again, as this space becomes more sophisticated, the likelihood of what we're witnessing to be a mid-range accumulation instead of a breakdown actually increases. If we didn't have that sophistication of the large interest of investment funds on the side trying to get into this space, well then yeah, the likelihood of going down to $20,000 is very high. But sitting where we are right now with the fundamentals, although again we could go down to $20,000, we have to always keep in mind that fear is one of the most volatility functioning creators within the market. So chaos can come from anywhere, right? And we never want to try to predict the chaos other than we know the chaos does exist. So as long as you're in a position that is capable of withstanding the chaos and you're in a good asset like Bitcoin, you effectively can play the easiest game of ever, which is just accumulate and do that month over month over month over month for decades at a time. So again, we're looking for a nice pullback into the $39,000 to $38,000 range. I don't suspect we'll go below that. And again, if we look closer, we can see some of the characteristics for this potentiality. We saw an increase of supply come into the market here on the selling side, and the price itself actually went up as well. So this was a bullish indicator right here. Boom, boom. This is the type of effort versus result stuff that we're looking for in the Wyckoff schematics. And again, we're actually seeing a decrease in selling pressure, largely speaking, as well. We're still waiting for a big spring. Whether we get that or not is an entirely different story. The amount of open supply that came out of the market back here in the beginning of May was actually phenomenal. It was enormous. It was almost a percent of total supply. It was not an insignificant chunk. And we look at that by going back over to our Glassnode data. If we open up to May here, that volume and supply signature was this move here when we went from around 13.6% and spiked up to around 14.2% of global supply on open exchange. Whereas today, we've actually been decreasing pretty much day over day. But again, look at this constant decrease and then this massive fluctuation of supply. So this is a really big movement. And this was under the fear of part of the fear of the Chinese regulation on mining effectively as well. This is when the mining, I would imagine a bunch of miners were having to sell significant supply to match regulations probably, or potentially figure out where they're going to move to. But since then, again, we've seen this constant supply decrease on the open markets, and this is largely a very bullish signal. This is where you're starting to see a massive amount of divergence as well, where the orange line is continuing downwards while the bottom base of our white line, or Bitcoin's price, is actually increasing upwards. So there's a very high likelihood that, again, in my opinion, that we're going to dip into this $39,000 to $41,000 region still. So we're not quite there yet. We're going to get a nice chunk of supply that comes in to test the market one more time, probably equivalent to all the ones that we've seen across the board. So I suspect that we'll see a big supply run. And then again, our fear will likely almost completely reset at that point. And then I think we're going to be ready for a fairly quick move up to around $52,000. So seeing this as an AMA, we want to kind of test the gear out. I do believe the computer is running way freaking better, and this is a much smaller laptop. So just goes to show. I think we figured out what the problem was the other day. Well, I was lagging. It just kind of hit me like, wait, this laptop is like almost 6 years old now. Anyways, so let's go to live stream for a second. We'll jump over a few questions, see how everything's going. Okay, yeah, nice. Yeah, I wasn't showing the chart. Sorry about that. No chart visible. Yeah, I know. Yeah, you can. Jesse, can't you see in the background screen here? Yeah, okay. Yeah, I think we solved it here. That was my bad, ladies and gentlemen. Yeah, okay. So there we go. This is why we do gear tests. Yeah, that's about it. Pretty simple. I bet we see a nice dip down here, this $39,000 region. I don't suspect we can break below that. There's just so much large, significant buying that's gone on since then. And again, that's very visible in this this nice percent of balance on exchanges here. This is a very nice representation, I think, of how much accumulation has been taking place during this price range. It's not insignificant. Again, and these are by large interest players who have a multi-decade approach to their thinking. And again, look at how much supply got chewed up prior to then. So basically from March 1st, it was this massive decrease upwards of up to around 14%. So the majority of the supply that had been chewed up to this $14,000 range was basically where we are now. So the fact that so much of this had been accumulated at least to the 14% mark, around 10 grand, again, still leads me to believe that the large interests who are taking advantage of this are big players, effectively. You're talking about hundreds and hundreds and hundreds of millions of billions of dollars on top of each other being poured in on a daily basis. So good to see. Largely that's a positive effect. Again, there's reason to believe that any type of large traumatic event could dip prices below 20 grand just because of irrational fear in the markets, but it would be eaten up so fast you would probably not even be able to buy it. Again, there's just such a decrease from where we were in March to where we are today. And with the continuation of this trend, unless we see something break that trend and more importantly, be more of an outlier than what we saw back here in September. Because in January, these big market cycle ups is a huge supply chunk up we went from 6 grand to 3 grand effectively, right? And if we look even further back here, yeah, look how slow it was for the market to let the supply come in before the price dramatically dropped. Bang. And then here, even still, we actually saw a bull market with an increase of supply on the market. Isn't that amazing? People were starting to take it out of their cold wallets and sell it because they're like, oh, great, you know what? I'm out of this. I'm finally getting out. I'm sowing in a profit. And then the last final scare of people here in March 11th, 2020, during the beginning of the pandemic was that last little chunk of supply, that final scare of retail hands and people that wanted to sell or need to sell to make ends meet, and then every day since then we've been on a total decline. We haven't changed that direction, and this is one of the interesting things, is that we've only been on a decline. Right? So this is probably an important factor to remember. We've been on a constant accumulation basically since March 11th. So I don't think this bull market is done. We haven't seen any massive supply come into the market to believe it. So I just think this is kind of a final last shake of hands before we enter a multi-year bull market effectively. So anyways, keep that in mind. Let's deal with the arcane bear, and we're going to take a look at the question side of things now, because I think this is open. Is it working? Yes. Okay. Do you ever use Ichimoku or SRI weekly overbought? Nice. Okay. Okay, let's go back over a few and take a look at some of this. Okay, so we use most of the time we try not to use almost any indicators. I think they largely cause noise for people and make the decision process significantly more difficult than it needs to be. Generally speaking, my favorite thing to do is remove all of the general indicators and kind of start from scratch and focus on our accumulation range. The only thing I look at is volume at this point. So this is a Bitcoin chart with only volume, both volume profile and volume and supply signature down at the bottom. This is again why we believe we're in a mid-range accumulation range. Now, this is crucial though, is that this area is crucial. If we start to break below and for some reason can't close back above $40,000, we're definitely coming down a lot lower. So I would be very careful about that. But as of now, we're staying again largely above at least the point of control for the trading range since we took off at around 42,000. And we've stayed there significantly through this area chart. Like again, one of the reasons why I don't like using candles is compared with the area chart. The area chart just gets rid of some of the noise, and it shows me where are we getting closes without the wicks effectively. And we got all of our closes for this dip down above this VPVR range, and that I think is extraordinarily important. I still think that we're going to fill just this VPR range. So what I like to then do is go over, and you asked about Ichimoku and RSI, so then I go and start to add different indicators. So we'll start with RSI. So we have an RSI in the daily chart here. We can minimize this one, and we'll open up the RSI a little bit more, something like this. Okay, so your relative strength index can be used in a few ways. One of the important parts to note here is that as we had our first price down moment in the RSI, this whole accumulation range of the RSI moving up and the price staying relatively flat is actually quite bullish. This is almost bullish divergence. If we were to have just a little bit of a down of price, it would have been a perfect bullish divergence. But again, flat price is equally as good as price rising. So I suspect what we're going to try to do is rinse and release that RSI into that $40,000 range and then continue back up to the top of the RSI box. So this is the relative strength index. So again, this is kind of a way to look at how much buying and selling and pressure. And we haven't reset the RSI yet. I suspect that we will before we go up here, because we're going to need a big move to get above 52,000. And the market really wants to test this floor, okay? It really wants to make sure that $40,000 is like the last of the weak hands. And I suspect that's what we're going to get. So what I then do is I close that out. I go back to my simple area chart. You guys asked also about Ichimoku. I don't usually use those, but there are some variations that I like. This one was gifted to us. It has a variation of an Ichimoku and a Bollinger Band kind of smacked into one. Here's another variation of it. I like it. It just shows where you have significant volume bars come in it basically shows kind of like almost like a roof and floor. So let's open up all of these just for fun, because this is what the colorful chart looks like. Again, the bright yellow color here is actually Bitcoin's price. This is our area chart. If we go closer, I kind of went over this before. One of the reasons why I think this is such a strong, important area is on the daily, we hit the 300 and 214, sorry, the 300 and the 200, 314 and the 200-day moving averages. We're just above the 50, and we're right in the point of control around 39,000. So that point of control is so important. I believe we're going to try to touch that. The main goal is to try to touch that. Once we do, I believe the RSI will have been reset, and we're going to get our real understanding if this is a bull market continuation or not. Again, I believe, I'm very, very confident that it is, but if it is not, it will come below the point of control. It won't be able to close back above it, and then we're coming down. Now, again, for how long? Who knows? Maybe that's only for 3 months. It could happen. We should never negate that these things aren't possible. Like, there's something that could do that could scare the market free with some significance to do that. It's not out of the range. It's highly unlikely, very highly unlikely, especially with how much buying pressure there is here. So I suspect we get the RSI reset. We touch 39, and then we bounce right back to 52 to 54, boom, and then we're moving on along much higher. Now, yes. So what I like to do is kind of add each of these indicators. Am I seeing kind of the strong prevalence? Yes, we're seeing a massive amount of support based off our RSI, our rising price, and our diminishing RSI, which was up there before at the top. We also see that the bull or the simple moving averages, your 200 and 314 day, acted as the resistance, which is this top line of the VPR. So we don't look for correlation being causation. We start with as a simple thesis as possible. Again, I do that by removing any indicators. I start at my base function. We're in a bull market. What are we seeing? Here's the supply and demand characteristics. Here's the supply and demand line within the trading range that we're currently in. We hit perfectly right at the top of the VPVR. And then as I overlay each of these, you start to see a confluence of events, which means the likelihood of the thesis that we had from the simplistic version is really the right one. And it's one of the easier ways to try to make a good thesis, I think. Often it's easy to convey a level of intelligence, or what appears to be intelligence, with a bunch of numbers and charts. But the problem is the average person doesn't know enough to tell when they're being lied to. It's very clear if you go in and you study the scientific fringe. Like, I'm a huge fan of research, and I've spent basically my life focusing on areas that were fringe, and then eventually over time became commonly or generally accepted by the masses. And watching the development of that conversation leads me to believe that it's not always it doesn't take place quickly. So being a contrarian is actually usually a good way to go. Here, we're not being a contrarian is because what's interesting is when you start leading the market, you have to recognize we haven't hit mainstream adoption yet. What the potential for something like Bitcoin could do, the mainstream adoption, it means global decentralized money without the need for peer-to-peer middlemen, which has effectively become governments and banks. That is an enormous amount of that value proposition is beyond anyone's understanding, and the banks and governments are probably going to fight hand over fist to keep the power within their sector. So it's a long story, not going to happen very quickly, but whatever brings the best product to the table usually wins out over time. Whether it's governance or more money. It's not just about who has the most power. It wins what ends up the most effective for as many people as possible. Okay, let's see if there's more thoughts or questions here. I guess the stream seems to be working. The computer is way faster, so this definitely makes sense. Got something on NFTs? Oh yeah, actually I do. We'll go over that. So there was one NFT project we spoke with this week. I'm going to share this stuff just because we liked them. I actually did retweet it. It's this Tribe X. So it's at IM_TribeX. We really like their art and the community build that they're initiating. I think it's really interesting to see. We've mentioned this a few times in our written thesis for all of our private members, but on the live stream as well. One of the things I was starting to recognize was the kind of cultural branding or group identity that we place ourselves into, and whether it's religious headdresses that we've worn, whatever culture you might be from, or our superstitions, or our currencies, a whole bunch of things, the way we dress ourselves, the way we inherently look even is often a part of this cultural identity. It's in fact, quite a strong importance for many people. But if we're looking at the use case of an NFT, my first thoughts were always around the potential of identity. But group identity is not really a passport, right? Like, just because I have the X country from X pass or X passport from X country doesn't necessarily mean I even identify with the current patriotic flag bearers that exist there, whatever it might be. And I think that over time, this conversation of cultural identity is going to become extremely important. So, I'm new to the NFT sector. I like their art. I like their team. Take a look. Do your own due diligence. I think we're going to line up for a podcast here in May when I get a little bit more time. But again, here we think that this place is worth playing in because cultural identity, branding, the ability to grow a community, give back to that community is a really powerful thing. And it's, yeah, I don't understand the full potential of it yet. So I'm deeply intrigued by what's going on in this space. This is why we all of a sudden really liked the Bored Apes and the Mutant Apes. Is, okay, here's a development of a cultural Web3 identity. What does that look like? Who are the people that are involved in that, and how does it stoke what they're doing? So I thought that was fun. Okay, let's see. We'll go do another question. Got to learn how to switch screens here a little better. Nice. Will Bitcoin ever be more equally distributed to the masses? This is a great question. It's a difficult one because wealth has never been equally distributed. Now, if you just change the word wealth for mass or energy, and understand that they're almost functionally, well, probably let's just go with energy because mass maybe has a little bit of a convoluted, like, oh, so all big things are good. It's like, well, no, that doesn't make sense either. So let's go with energy. Energy is actually largely centralized in single areas. If you go to the jungle and you look, the trees take most of the light, most of the nutrients, and everything below it doesn't really get a starving chance until that tree falls over. And nature is actually works on a kind of basis of this. The largest planets are going to, because they have the most mass, they have the most gravitational pull, they're going to pull the most of the shit into it. And it over time will become then the biggest planet within those ecosystems. So nature by itself is going down this, what most people would see as the equities don't appear just per se, right? Like one body draws in more energy than the others because it starts this way. And this is a function of nature. So we can't and shouldn't govern different than nature itself functions. Like you don't want to all of a sudden go, oh, Jupiter, you're too big. You got to start like letting more asteroids hit the Earth. This doesn't sound like a great idea for us. Equality at one sense may be a total unserved justice within another. And there's some things that we don't understand within this, like how ecosystems grow, develop, and change. Just because one tree grew up there doesn't mean it deserved to be there. And it will one day fall. And then some new tree will get the opportunity to grow up within its place, take over a bunch of sunlight, nutrients, block shade, and destroy the potential of a bunch of underlings. But oftentimes those underlings are also the children of that one tree who's been trying to drop seeds. And as that tree grows, we have to look at a lot of the development of these ideas as a continual process of evolution, effectively. So because nature is following this path of kind of inequality, like a significant body accumulates more of this energy, is it ever financially distributed equally, is kind of you don't want to work at distributing that equally. The reason it's unequal is because part of the way we distribute energy is based off not always, but who is being most productive for the society by inventing things that make it easier for us to live. And there's a lot of there's one of my favorite Buckminster Fuller quotes that drop into this idea about the specious notion of us all needing to have jobs. And right now we've got people who regulate regulators who regulate the regulations, and it's just this huge bureaucratic bullshit where 90% of the jobs are effectively useless because they're not productive for the day-to-day society. And trying to figure out how we adapt our monetary systems, which are largely based off scarcity, and aim at more of an abundance or a kind of the infinite understanding of this idea of the growth and then the decay of an ecosystem. Now, probably because cycles like this are larger than any human being's lifespan. Like some trees take, say the tree we're talking about takes 150 years to grow and die. Within your life framing, depending on where you are, will appear totally unjust to where you are within the sequence of events, right? Whereas the old fall, anyways, I wouldn't speculate too far as to if Bitcoin needs to be distributed so much as the access to it needs to be distributed. Bitcoin itself is amazing because we don't need a government to rely on it. Now, who ends up with the most of that is kind of a choice of individuals. It's not a government. Now, those individuals, how they pool capital, etc., could become like a governance, right? We see this large push to make Bitcoin more green. Well, personally, I don't give a shit if Bitcoin is more green. I mean, I live in the middle of the fucking jungle, and from what I know, CO2 is fucking amazing for the plants, and they grow a hell of a lot bigger when we give them when we give the plants more CO2. So pollution is a different conversation. There's these very difficult, again, these kind of scientific conversations that that the general community lacks all the rigor of debating and just kind of fall to the wayside because people are not clued in. So the simplest way to do that is, again, go, okay, well, those who are accumulating are those who believe in the potential of this tree really growing into what it could be, which is a money that's not governed by state. And even though us as individuals should have an influence in everything that we do in our lives, because we're like the benefactors of why we're trying to create this technology, it shouldn't become malicious. Effectively, we don't want we want as few of the things to become as malicious as possible. The ecosystems function better when they're of a collaborative nature. So what I think equality should here address is actually more so the on-ramp. And this is one of the things why we're so excited about the play-to-earn sector is that, okay, even though the Bitcoin is out of the hands of most people because the on-ramps aren't there, the on-ramps were never really there. A large part of it is technology. But now most people, even if they don't have a bank account or an identification card or maybe even a birth certificate, they have a cellular phone. And this on-ramp into potential reputation and digital identity that's not backed by a government, again, is one of the most profoundly valuable propositions that the human species has ever walked into, because we have been constantly falling over ourselves through tyranny of so many different faces due to the layers of corruption that takes place when you start to build up societies at scales of pretty much anything over 10,000, just because of the sheer volume of people that's involved with a planetary conversation. So I think there's a real opportunity through here, even though it's not distributed properly through Bitcoin, is that the on-ramp into a decentralized financial ecosystem can take place as someone just picks up a game. And they don't need to have a passport identity, because if they're playing this game and they've spent X amount of hours and they've shared with this amount of people and they've then liked or tweeted or commented, you start to build a reputation score based off the people's interests. Now, again, this is dangerous technology too, right? We cannot totally walk away from the fact that something like a central bank digital currency with digitally tracked biometric identification could be a dangerous fucking tool to hand over, considering, look, it was like you got Hitler, Mao, Stalin. I don't even know how many other potential villainous people who've killed millions, names you could come up with, a bunch from the CIA. So we know this is an inherent problem in power and corruption, is that we are effectively not the victims, but at least there's a lot of negative symptoms to a system that just pours money into these unregulated ideas. And people are always like, well, Bitcoin, you're like, oh, it's for criminals. Actually, one of the most amazing things about Bitcoin is that it's not in any way, shape, or form motherfucking anonymous. It is very transparent about who and where the money is sent to. And it's extremely implicit on how much of that money can be sent, right? So I think these things over time will start to make sense to more people when they realize the level of corruption that's taken place, or let's say the corrosion that has taken place to the economic wires and function or the economic rails of the system that we currently use today. People just haven't recognized it yet, and that's largely why I think the US dollar and many of these currencies have any value. So whether Bitcoin is in the hands of the masses, I think, is unimportant. Having it as a monetary layer, the money rail, and then how they on-ramp into the money layer, kind of like playing a game on Kerbata, and they trained Kerbata for Avalanche, and Avalanche for Bitcoin is a much better function than trading a rupee for a colone for $1, because these are just government-backed systems, and those government-backed systems are jacked full of untransparent corrosion. Whereas here we have a totally transparent system. Yeah, hey, look, you can hack the bridges, but at least we can see where it went. It's kind of fun, right? Anyways, so something to think about. I don't think equality is necessarily a function of this universe, but dealing with the nature of the wave as it is usually gives you a much better leg up on being able to take advantage of the energy, economic energy as it sways between each of these monolithic trees that live within our garden. Okay, let's see. That was a long question. That was a long answer to will Bitcoin ever be more equally distributed to the masses? I don't think we need it to be. I think we just need access to be open. That's a simple answer for a long-winded rant. Are you 0% stocks? Yes, that's true. I did in the early days, in the early days of my interest in investing. I way back 2009 or 10, when the Canadian ganja industry was first starting to open regulation on marijuana. That was the only interest I had there. But no longer. Actually, that's pretty much the last time I looked at it. Do you have Xenon? I do not. There's so much going on. Okay, awesome. Well, there we go. It's very clear that the newer computer does a way better freaking job at the live streaming. So thanks. We figured that one out. And we learned something super valuable there too, because this makes it a lot easier. Anyways, thank you for joining on a little test run today. Sorry about not sharing the screen there, but I'm quite excited that this is going to work now into the future with a much easier basis, because yeah, that old, I didn't realize the studio computer was 5 years old. It's like all of a sudden one day it's just like everyone's like, it's lagging. I'm like, oh yeah, it's actually really bad now. I think they do that to you. They make these awesome updates, but if your computer's too old, it's like they secretly keeping installing these updates in the background until one day your computer just don't work anymore. And that happened the other day for my my regular streaming computer. Anyways, we'll keep it at that. Thank you, Arcane Bear family, for joining us today. Yes, we'll speak again soon. We'll keep it simple. We'll chat again soon. We'll see you guys again on the other side.